Welcome to this month's Trader Connect. I just wanted to do this here. Okay, it's running. Okay, so yeah, for those of you, Trader Connect, for those of you who are new to this webinar, Trader Connect is just a little webinar we do every month for people who are looking for some trading ideas. So this is purely technical analysis, mostly. I do give some commentary on fundamentals and those kind of things, but it's purely just a technical analysis look at different stocks, commodities, Forex, indexes. So yeah, if there's anything you would like to look at specifically, just put it in the chat for me, and then we'll have a look at it. Okay, but as usual, as we wait for people to arrive, who is Rand Swiss and what do we do? Okay, so for those of you who attend this webinar, you'll be well versed in this. Rand Swiss, we're a multi-award winning stockbroker. As you can see there, 2 years we won the top stockbroker. In the middle, 2020, we were second. So we dropped from first to second, and then we popped back up to first place. And it's usually, you'll see, if you go look at the awards, Intellidex, it's hosted by Intellidex and Investors Monthly. But if you just Google South Africa's top stockbroker awards or something, it should give you a link with a little PDF showing you where each company rated. And you'll see from 2018, actually 2018 already, we were second, first, second, first. And you will see during that period, it's always between us and Standard Bank. The Standard Bank's first, then we are first. Then they are first, then we are first. So it's always this fight between us and Standard Bank for first and second place. Hopefully this year, 2022, we will be able to retain our top stockbroker award. We will find out towards the end. I think it's towards the end of this month, maybe beginning of October. I'm not entirely sure, but we will find out how we placed. Then in 2019, along with being rated the overall best broker, we also got the top advice broker award. We got the People's Choice Award. So that's very important because when they look at the top stockbroker award, they listen to the clients. Because if you're a client of Rand Swiss, you would have seen emails going through asking you to go do a survey. So they look at the clients, what the clients are saying in the survey, but they also do their own independent research, looking at our pricing, looking at our platforms. They do some mystery shopping, everything. But when it comes to People's Choice Award, it is 100% completely just what did the clients say. Okay, then in 2020, even though we dropped to second for overall stockbroker, we got the award for top online broker. So that was very nice. And then now 2 years in a row, we've got the best tax-free savings account. So if you're looking for a tax-free savings account, do not hesitate to give us a call or send us an email and see if we can help you. Okay, what do we do? Online trading, this is what most of you guys do. Online trading, we give you the platform, but you log in yourself, you place your own trades. And that is why many of you might be attending this webinar, because you're looking for some trades to place. So you're going to look at what we have to say today, and maybe you're going to start placing some of those trades, or you're going to say, no, these ones are not for me, I'll keep looking. But that's online trading. You manage the account yourself. Private broking, you still manage your account, but you would like to have a broker to speak to. These guys are usually more long-term because we don't really give that much advice when it comes to short-term trading. But if you're a long-term investor, you don't have the time to always watch the news, watch the markets. You would like to have a broker to discuss with you some ideas. Hey, where do you think I should invest? What do you think of this stock? Or I have this stock in my portfolio, and I'm sure I sell it. Private broking. Managed portfolio, that's where you are almost completely hands-off. You just give funds to Rand Swiss and say, invest this for me. I trust you guys. Please invest this for me. And then we will put you into one of our model portfolios. We've got a global equity portfolio. We've got a UK fund. We've got a European fund. We've got an SA fund if you want to invest locally. So we'll put you into one of those portfolios. Structured products. So we have one available now that will be closing at the end of the month. that will give you at least 14%. It might give you more, but we know it will give you at least 14% per annum in US dollars. And 14% in US dollars is really not a bad one. Basically, it's an auto call. So you invest now, after a year, after 12 months, they will look, it goes into 3 indexes, the NASDAQ 100, Eurostoxx 50, and the Nikkei 100. So you basically look, investing on the performance of those 3 indexes. And after 12 months, they look at the worst of those 3 indexes. If the worst one is positive by just 0.01%, you get your 14% in dollars and the investment closes. If not, they keep doing it every 6 months. Every 6 months, they will have a look. Is the worst of those 3 indexes positive? If any of them are positive, you will get your 14, at least, well, let's say, at least 14% per annum of simple interest in US dollar. And yeah, 14% in dollar is really not bad. They will do it for 5 years. At the end of the 5th year, if it's still not positive, it gives you 35% capital protection. So that means if the worst of the indexes are still negative after 5 years, but not by more than 35%, you get 100% of your capital back. If it's negative by more than 35%, then unfortunately you will do whatever the market did. But yeah, that's basically, that's how a structured product works. And we have one of those available now if you're interested. I think Viv is doing a webinar on it actually tomorrow, where is going to discuss 2 structured products we have available at the moment, that being one of them. Okay, offshore transfers, very simple. You've got money in South Africa, you want to send it out of the country. Maybe you have an offshore account with us, or you have an offshore bank account, or whatever. You have rands, you want to convert it into dollars, euros, pounds, Australian dollar, Canadian dollar, whatever, and you want to send it out of the country, we can assist you with that. Wealth management, you want someone to sit down with you and actually holistically take a look at your entire financial situation and investment goals and come up with an investment plan. Wealth management, tax-free savings account, spoke about that before. Rand Swiss, 2 years in a row now. We've been rated the best tax-free savings account in the country. And I'll tell you this, as I always tell you, if you have 36,000 Rand to invest every year, well, not even 36,000, from 0 to 36,000 Rands, put it into a tax-free savings account. If you are a long-term investor and you're going to invest, you're going to buy ETF, because that's what you're allowed to invest in a tax-free savings account. You cannot invest in individual stocks. You can only invest in in ETFs. But if you're going to buy those ETFs and you're a long-term investor, you're going to invest for 15, 20, 25, 30 years, you can get quite a lot of capital growth. And the problem always with getting that capital growth is one day when you sell it, you have to pay capital gains tax. And that can eat away quite a bit of your growth. But in tax-free savings account, you get to keep all of that growth. You don't have to pay a cent of tax. So that is kind of like the government is giving you free money. 30 years from now, it's instead of paying them hundreds of thousands, if not millions of rands in taxes, you can keep it. It's for you. Of course, they limit you to only putting in 36,000 a year, but still, it's a very powerful tool. If you've got money to invest, your first 36,000 rands a year, I would always say, put it into a tax-free savings account. I personally have one. I use it. My preferred ETF is one of the offshore ETFs, like the Signia 500, which tracks the S&P 500, but there are a bunch of others. There are South African, there are property ETFs, local property, offshore property. You get UK tracking the FTSE 100, Eurostoxx 50 ETF. There's one tracking Japan. So there's a bunch of ETFs for you to choose from, whatever you feel is the best, but do it in a tax-free savings account if you can. Okay, then our network partnership. So Investec, when we do these offshore transfers, we do it via Investec. Structured products, we sell quite a few of Investec structured products. One of the ones Viv is talking about tomorrow is actually an Investec structured product. Saxo, they are now known as DMA. We will be looking at the platform when we look at the offshore stuff. Again, if there's any specific offshore stock you would like to have a look at, just put it in the chat for me. Velocity Trade, that's a more local trading platform. We will look at that one as well. And then, of course, you'll see a bunch of Rand Swiss guys on the media, especially Gary and Viv. They're always on ETV. You can hear them on 702. They're on CNBC Africa, SABC News, BDTV. We're in the media quite a bit. But okay. Now, these are not recommendations. Like I said, these are trade ideas, but by no means am I saying go trade these ones. These are my opinions. They are not recommendations. They're just an idea I'm putting out there by putting all these indicators on the chart. I tried to make a call. Oh, this looks like a long, this looks like a short. But they are not recommendations. They are only ideas. Please trade using your own discretion. Go do your own analysis. Whatever you need to do, these are not ideas. But okay, let's analyze your trades. Okay, so I'll start with the usual USD ZAR. As you can see, it is pretty high. I mean, when was the last time it was trading at this level? Let's just zoom out. We have to zoom out quite a bit to get to a point for the last time. I think it was like 2020 maybe. Yes, there we go. The last time it was this level was in August of 2020. Because you guys will remember back when COVID started, the Rand blew out to 19, but then it proceeded to continue to strengthen all the way back to 13. And now it's starting to weaken again. And you'll see yesterday there was a big candle with the Rand weakened. Sorry, I'm zooming in here. So it started the day at about 17 Rand 8 cents. By the end of the day, it was at 17.45 about. Why? What happened yesterday? Well, yesterday, America's inflation numbers came out. The inflation numbers came out higher than expected. So in other words, the analysts and the markets expected inflation to be at a certain level, and then the actual inflation numbers come out, and inflation was actually much higher than expected. And if you've attended this webinar a few times now, you will know by now what does higher inflation mean? Higher interest rates, because that is how the central bank fights inflation. It ups interest rates. And when interest rates are higher, what does it mean? People have to spend more money servicing debt. If you want to make new debt, it's going to cost you more. Why is that important? Well, the more debt you make, the more money comes into the system. The more money comes into the system, the higher inflation gets. So what does the Fed do? The Fed, sorry, just one second. So the Fed or any central bank, I'm not just the Fed, if South African Reserve Bank, Bank of England, Bank of Japan, European Central Bank, whatever, they make debt more expensive by making interest rates higher. And by that way, they try to bring debt levels down. They try to bring the money in the system down. And in that way, they try to fight inflation. So yesterday, inflation numbers came out much higher than expected. So how did the market react? Well, it said, oh, well, guess what? Higher inflation means higher interest rates. And you'll see usually when interest rates go up, what happens to the stock market? It goes down. Why? Because companies usually make a lot of debt to grow their business. And when the interest rate is higher, even if it's just 0.5 or 0.75% of a interest point, or whatever, 75 basis points, that for a company that's doing billions in business, that's a lot of money. So that eats away at the profit, because now they have to spend more of their profits to pay off their debt. That takes, that affects the stock market negatively, or rather risky assets. So risky assets are things like equities and emerging market currencies like the Rand. Second of all, many people have the opinion that the only way the Fed can fight this extremely high inflation number, because it is extremely high for America. I've said this before. In South Africa, we're used to inflation of like, well, the South African Reserve Bank's targets, I think, between 4 and 6%. So we're used to inflation numbers of like 5, 6, sometimes 7, but usually we want to keep it between 4 and 6. But in America, that's not what they're used to. They're used to inflation of like 1%, 2%. So when their inflation came out yesterday, which I think was about 6.7%, 6.8, that was very, very high. And it has been very high for a very long time. So the opinion is of many market participants, and the Fed has kind of came out and said it, the only way to fight inflation that is this high is we have to induce a recession. We have to drastically contract business activity. We have to drastically contract the amount of money that's in the system. That would be the only way to fight inflation. And when you're talking about the recession, what do people talk about? Oh, well, market crash and those kind of things. And when that happens, they go into safe haven asset. The safe haven asset, one of the biggest safe haven assets, is the US dollar. So people sell risky assets like the South African rand. They buy a safe haven asset like the US dollar. Hence, you see the rand weakening as it has for this whole year, along with the rest of the market. Emerging market currencies have not been doing so well, but that is what happened yesterday. When inflation was like super high, people were like, oh, well, interest rates going up, recession coming, dollar strength. And on top of that, you have to remember there's also what is known as the carry trade. So where you buy the currency with a high interest rate and sell the one with a low interest rate. And when the inflation numbers came out, the market will, okay, well, the Fed's going to up interest rates. And the Fed has been open about this, actually, by 75 basis points. So now suddenly I can earn more interest on my dollars. So you know what? I'm just going to buy dollars, sell my rands. Okay? So that's a story about what's happened yesterday and pretty much what's the story since the beginning of the year. Now, let's do some technical analysis. Okay. So first thing we can see here is, let me put a trend line. Oh, sorry. Where is this now? So yeah, at about this area here. So let's put it here at 1710. Resistance, resistance, and now it's looking like it's finding support. So this is the level now. It finally broke above it, came slightly back, found support, came back, found support, went back up. So it looks like 1710 is now a level of support on USDZAR, which is not necessarily good if you're hoping for rand strength. But that seems to be the level where the rand seems to be finding support, which could tell us that maybe the rand can continue to weaken. But let's see. Let's put our favorite little divergence indicator on. Okay, so that at least is a little bullish for the rand. There is our divergence. And people are used to this webinar, you will know exactly what I'm talking about. For people who are new, what is a divergence? So a divergence is when the stock or the currency or the commodity or whatever you're looking at is creating new highs, or maybe it's even trading at the same level, but your indicator, you're not seeing the same thing happen. You are not seeing new highs created. In fact, you're seeing a lower high being created. That is a bearish divergence. If it's the other way around, where you're seeing lows, more lows creating, but it's not creating, it's creating high lows, that would be a bullish divergence. But this one specifically, this is a bearish divergence. And this is somewhat of a leading indicator. This gives you a signal like, hey, wait a second. This trend could possibly be running out of steam. We could see a change in trend. Now, again, the usual disclaimer, these things are not always 100% correct. They're not foolproof. They're not always Just because there's divergence, there will be a change in trend, but they tend to be a good signal. And right now we're getting this signal saying, hey, maybe the Rand has peaked. Now, my personal opinion, again, these are not recommendations, these are just my ideas, but in my opinion, I think this might be correct. Why? Because when the market reacted this way yesterday, I think that was just a knee-jerk reaction, because the Fed already said, like months ago, we are going to do 75 basis point interest rate hikes. This is not new news. The market knows this. The market already has this priced in. So I think what we'll see is there's just a knee-jerk reaction, and then the market will go, hey, wait a second. We already knew the Fed is going to do 75 basis point hikes. We know this. This is already priced into the exchange rate. We already priced this into the market. So I think what we might see is actually the Rand coming straight back down. We might not go back to 16, but we can very easily go back to 1660, 1650, which is pretty much where the next level is. Sorry, 1620 actually. We put a line there. 1620 is the next level. So we might not go back to 16, but this is it can fall very easily back into this range. So in my opinion, my humble opinion, and again, I'm not like a fortune teller. I cannot see the future. I can be very much wrong. But in my opinion, I am inclined to believe this divergence at the moment. And I think we will see the Rand falling back into this range between 1620 and 17. Okay, do we have any other questions on USD-ZAR? Okay, if not, I'm gonna move to Sasol, where we actually, on Trader Connect, we have an open trade on Sasol. So for those of you who are Answers clients, you would, whenever we have a trade idea, you will see that we'll send you these Trader Connect ideas. The last one we sent was on Sasol. So what did we say? We said that Sasol right here at about 330 Rand a share had very good support. Support, 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 and then finally, boom, it broke. And when this broke, that was when we sent out our trade. We went short at 315 Rand a share. So what happened? It came back, boom, found resistance, and down it came back again to where it's now at 318. This was the same. Why did this happen? Again, this goes back to that inflation number yesterday in America. Higher interest rates, possible recession. Recessions are not good for oil. Why? Less economic activity means less demand for oil. Less demand for oil, oil prices fall. Sasol, of course, is an oil company. They don't want oil to be low, they want oil to be up. So that's one of the reasons it fell. Two, Sasol would have fallen just because generally the market was down. We can look at the Aussie. The Aussie was down yesterday as well. So it was just generally the market was down. In America, we'll look at the S&P 500 as well. For those of you who don't know what the S&P 500 is, like in South Africa, we've got the top 40 index, which is the 40 biggest companies listed on the Johannesburg Stock Exchange. In America, they've got the S&P 500, which is the 500 biggest companies listed on American exchanges. So we'll look at that index as well. But you'll just see yesterday, in general, risk off. Equities down. So that's another reason why Sasol fell. Okay. Now today it's slowly but surely starting to recover a bit. But yeah, look what happened. It's interesting how this happened exactly when it hit resistance. Boom, it fell. So we are still short on this one. It has not hit our stop loss. Can't remember exactly where the stop loss is, but it's definitely above 330. So this trade is still open. It recovered. It's 3 Rand in the red at the moment because, as I said, we went short at 315. It's now 318. Okay, so Sasol. So let's look, while we're on Sasol, let's look at oil. Okay, so what do we see? Oil, it looks like it's more of a range. Let's rather do a range. This little area here was support resistance. So basically between $95 a barrel and $97.50 a barrel, that was where oil found support. And now it's broken through. And of course, now this has turned into resistance. Okay, so this is where oil is currently. Same thing like I just told you with Sasol. A recession is not good for oil, especially in America, because when we're talking about recession, we're talking about the Fed, and the Fed is going to induce a recession in America. But of course, America is the world's biggest economy. And as the biggest economy, if America goes into recession, it's pretty much safe to say the rest of the world goes into a recession with it. So that, of course, is very bad for oil. OPEC is kind of trying to be positive about it. OPEC, I think they said last week, was 2 weeks ago, that OPEC meeting, and they said they were only going to cut production by 100,000 barrels a day. Market didn't really care. Market's still skeptical about global economic growth. And if they're skeptical about global economic growth, they're skeptical about oil, because oil runs the engine, the economic engine. We use it to provide electricity. We use it to put it in our cars. We use it to put it in trains, to move product around. We use it in ships to move our products around the world. We use it in trucks to move it around. And when the economy is slowing down, guess what? Oil, that's not good for oil. So let's see, let's put in another one up here. Because as I said, this is predominantly technical analysis. I know I'm talking a lot about fundamentals. But okay, so what can we see? This is the Ichimoku. Yeah, you'll know this one well as well. Let me just change the color that's actually a little bit more visible. Orange. Oh, no, sorry, it's already an orange one. There's already a green one. I'm just going to go with yellow. Okay, there's your yellow line. Okay, so first thing, leading indicator on Ichimoku, the cloud, the Kumo. The Kumo predicts where it thinks it is going. If it's red, it's predicting bearishness. It's predicting that prices will continue to go down. Now you can see now there is a nice big red cloud, which is very bearish for oil. But as you can see, and this is always very interesting, I find this always very interesting about this Ichimoku indicator, and especially the cloud, is as you can see, it's drawn out ahead of time, 26 days. If you're looking at a daily chart, 26 hours. If you're looking at an hourly chart, so it depends on time frame, but we are looking at the daily chart. On the daily chart, 26 days ahead, okay? And what you'll see is like, even though it's drawn out ahead of time, it kind of predicts to you where can this stock or commodity or whatever find resistance and support. And look like that. Even though it was drawn 26 days ahead, 26 days later, what happened? Boom, it hit the border of the cloud and found resistance and came back down. You can see the same thing kind of happened here. Fine, it broke through that one, but boom, found support, came back up. And then it kind of followed this dip a bit, and then finally it came back down again. Same thing happened there, found resistance. So I always find it's interesting how good this Ichimoku indicator can sometimes be at predicting where will we find support and resistance going forward. But okay, so found resistance there. Point is, cloud is very, very red. So it's predicting that oil will continue to drop. Apart from that, what else? Your short-term moving average, what are we seeing here? Is below medium-term moving average. That is bearish. Your lagging indicator, which again is just your price put back 26 days, is below where price was 26 times. So that's also bearish. So on this indicator, on this Ichimoku indicator, what are we seeing? We're seeing a lot of bearishness. We're seeing a lot of predictions and indicators telling us that oil is on its way down. Oil is on its way to weakening. So if you're looking to go long oil, maybe not such a good idea. If you're looking to sell oil, to short oil, you might just want to do that. Just be careful. If you're using velocity, just always check this little purple button here, this one that says CFD. You can click it, and then it brings up your symbol info. And then you can look at the lot size. You see here where it says lot size, 100. Basically what that means is one contract. So if you trade one Brent contract on Velocity Trader platform, the total value of that trade is for $100 of oil. 100 barrels of oil. So, wait, let me just go back a bit. And then that's the margin. So basically, the total value of the trade is whatever this price is, $94, times it by 100. That means $9,400. Then you have to times it by 17 for the rand. And suddenly you're looking at the total trade value of like over 100,000 rand, of which you need to put down 6.2%. So let's say about 8,000 rand. That is a big contract. That is a lot of money. So if you don't have an account big enough to trade that size, look at something else. Look at rather trading Sasol. Because at the end of the day, Sasol is a oil company. So Sasol share price will somewhat track the oil price. So it's cheaper actually, or you require less money because in Sasol, one lot size is one share. So you can just trade 1, 2, 3, 4, 5, 10 shares, whatever you can afford. There is a bit of thing to keep in mind though when trading Sasol. Currency risk, okay? Because you're trading Sasol in rand, but Sasol is earning oil money in dollars, so the rand exchange rate will kind of also affect it. So you'll see it won't always perfectly follow oil price, Sasol, but it will mostly follow it. So just keep that in mind, okay? Okay. Let's give you an example of another one that's affected by rand. So you get these stocks on the JSE called, which we refer to as the rand hedge stocks. And these are stocks who, even though they're listed on the JSE, they make most of their money outside South Africa. A very popular one is Richemont. So Richemont, if you don't know them, Richemont, they're into the whole luxury goods market. And the luxury goods, you'll know, find out, not just Richemont, but most luxury brands, they make most of their money in like the duty-free shopping areas of airports. Or, well, let's not say most of it, but they make a lot of money in the duty-free areas of airports. But also Richemont owns a lot of international brands, which means they make most of the money outside of South Africa. In other words, they make most of the money in dollars, especially in the airport areas. So you'll see that Richemont tend to do well when the rand weakens, because suddenly now they're getting more rands for their dollars. And you can see this. I mean, if you remember the chart we looked at of the rand earlier, we saw the rand weakening throughout the year. Well, guess what? Richemont has been strengthening throughout the year. And a lot of that has to do with the USD ZAR exchange rate. That's a rand hedge. Another one, Mondi. Mondi is another one that makes most of its money outside of South Africa. So Mondi is also another Rand hedge stock, you'll see. Mondi also tends to do well when the Rand weakens. But okay, while we're on Richmond, let's quickly have a look. Is this a possible trade here? Okay, so using the Ichimoku, we can see green cloud, very good. Again, we can see the cloud giving support there. But if we look at the rest of the indicators, what do you not want to see? One, you do not want to see the lagging indicator moving in between price. You either want to see it moving above the price or below. If it's above, that is bullish. If it's below, that's bearish. But when it's moving in between the price like this, it's moving, it's basically telling you, ooh, the stock doesn't really have any momentum at the moment in any direction. It has no direction. There's no real trend. It's just trading sideways, which isn't always a bad thing. I mean, you can still trade sideways, stocks moving in a sideways channel, because what do? Let's just move this out. You draw a quick line. Okay, there we go. There's resistance. And then down here, about there's support. So what do? You trade this range. When Richmond gets down here, you buy it. When it gets up there, you sell it, buy it, sell it, buy it, sell it, and try to trade that range. So just because the stock doesn't have a trend, doesn't mean it cannot be traded. It can, but yeah. Just be careful on it. Let's see, another trend indicator is, so the MACD, even though I said this is a divergent indicator, it's not really, it's a trend indicator actually, which is very good at showing divergences. So what do we see here? Another divergence, but can we trust this divergence? In previous webinars, I have told you like, yes, okay. So we are seeing, fine. It's not creating new highs, but it is reaching the same highs. Yet, on the MACD, it is not trading flat. It is going down. So many people will look at that and say, that's a bearish divergence. Maybe we should sell Richmond. Maybe you should. But should you do it based on this divergence? I'm not so sure, because you will see this when a stock has no direction, when a stock, commodity, forex, whatever, trades in a sideways horizontal channel, you will usually see this happening. You will usually see a divergence like this. So this is kind of like a bad divergence. It's not usually a divergence I would trust, because it always happens when you see the stock trading in sideways, you will see that MACD slowly but surely going down. Likewise, you will see the same thing. If it was a downtrend and then sideways, you'll see the MACD going down and then start going up again. It's always the case with these sideways channels. So yeah, I wouldn't trust this one. At the moment, when looking at Richmond, it just looks no trade. So rather look to trade the channel, the sideways channel. Okay. Before we move to the international stocks, is there one we want to look at? Anyone, if you want to look at on the JSE, you just put it in the chat. But it seems like we're good. Like there are no requests for the JSE. Okay, it's fine. Then I'm going to move to the DMA platform. Okay, so like I said, we're going to look at S&P 500, US 500. So this is basically America's version of the top 40 index. And as you can see, what happened yesterday, big crash. I think I read somewhere that was the biggest one-day loss in something like 2 years. So since pretty much, I'm assuming the COVID crash, this is the biggest drop on the S&P 500 since then. Why? Well, like we covered it, high inflation numbers, interest rates coming up, higher interest rates, not good for companies because it means less profit, plus recession. People are scared of a recession, which is again not good for companies because in what happens in recession? People in general just have less money. People have less money, they're buying less, they're spending less. That hurts the bottom line of a company. So when that high inflation number came out, boom, S&P 500 crashed. Same thing happened on the JSE, same thing happened in Europe. It pretty much happened everywhere. It was just a bad day for equities yesterday because of that high inflation number. But like I said, it might recover soon, because even though this was a knee-jerk reaction, I think the markets remember, hey, wait a second. The Fed is going to hike interest rate by 75 basis points, but we know this. They told us this. Like 2-3 months ago, they told us we are going to do 75 basis point interest rate hikes. This is not new news. We have priced this into the market. So you might see the equity market starting to recover, especially if you look at the level where they are currently. This level right here, 3,900. $3,900. Down support, okay, this one, boom, broke down, resistance, boom, came back up, down support, boom, came back up. So now it's back at this 3,900. That's the index level. 3,900 points. So it is back at this level. So this might be a good level to buy. And I mean, yes, this is the offshore market. You might not have an offshore account, but keep in mind, like I told you, on the JSE, we have offshore ETFs. And the one I mentioned was the SIG 500. The SIG 500 is an ETF run by Signia, and it is based on this specific index, the S&P 500. Now, again, this is not super simple, because as with Sasol, as with those Rand Edge stocks, the price of that ETF is not just, it is affected by how this index performs, but it's also affected between the USD Rand exchange rate. Because at the end of the day, inside that ETF, US stocks earning their revenue in US dollars, listed on an American exchange where you're buying the shares in US dollars. So inside that ETF is US denominated equities. So if the Rand weakens, suddenly in Rand terms, those equities are more valuable. So that's also something to just keep in mind when buying these offshore equities. But if you're looking to buy, this could be a good time to buy an ETF like that. If you've got an offshore account, you can trade these things, these futures and options on it. But this is a very, very pivotal point for the S&P 500. What happens here? Like, you can risk it and say, okay, we're not, this is a good level. There's a good area of support and support. I am going to buy now. Or you can say, wait, I'm not too sure. I'm going to wait. Because at the end of the day, if you look at this, sorry, let me just put this. I'm going to zoom out a little bit. Okay, so there. At the end of the day, this is a trend line. It is trending down. And we put another one here. So there you go. At the end of the day, this index, the S&P 500, it is in a downward trend. So I'm like, again, I cannot see the future. I'm just going by this technical analysis, but going by the technical analysis, this is a good area of support, but it has to be acknowledged at the end of the day, this trend is going down. So that's also something to keep in mind. You can risk it, say, you know what, this is a good level, I'm going to buy, or you can say, I don't know. This is a big downward trend. America is going through a recession, probably rising interest rates. We can see more weakness. So I'm rather going to wait. Or I'm just going to keep an eye, and I just want to check what happens here before I buy. So just keep that in mind. we can put another indicator on. Let's put that Ichimoku on. Okay, so see again there. Just put there, look where it found support. And again, remember, this cloud is kind of drawn into the future. It's kind of predicting where are you going to find support and resistance. And once again, it predicted it correctly. It came down, found support pretty much exactly where the cloud border was. So again, it's as I always find that very interesting how well it can draw, predict those lines for you. But okay, so what? This cloud, okay, so this dark brown, maroon, whatever color this is bearish. The orange one, this is bullish. So the Ichimoku is predicting bullishness. It's saying, this index is going to recover. But it has to be noted, this cloud used to be nice, big, and thick. Now look how thin it is. So it has thinned out a bit. What happens when it thins out? Boom, it can very easily turn bearish again. So keep that in mind. Your short-term moving average is way below your medium-term moving average, which is to be expected with this big, big candle. Because basically how these moving averages work on the Ichimoku is, I think the short-term moving one is 12 days, if I was correct, if I remember correct. But it basically looks at your last 12 candles and then looks what was the highest high and what was the lowest low, and it just takes the midpoint. So naturally, yeah, after this nice big candle, it would have come down again. Your lagging indicator is way below where price was 26 days ago. So that again is bearish. So even though the cloud is bullish, the rest of this indicator is bearish. So maybe keep that in mind before you buy this one. Let's just check one more. Let's try the RSI, the Relative Strength Index. Okay, so Relative Strength Index, what do we see? Bearish, it's below 50, but it's above 30. So that is your bearish zone. So we are getting a lot of bearish signals actually on the US 500s. So the more we look at it, maybe less it looks like a buy. The more it looks like a sell. But you can do, you can go short on these things. I don't think you can go short. There might be CFDs on the ETF, on the Velocity platform. If there are CFDs, then you might be able to go short on it. But if you have an DMA account with us, you have an international account, these futures, you tend to go short. You can very happily go short. Now maybe look to take your profit at 3,750 to 3,700 about. Somewhere in this range. You can aim to take profit. Because we are getting a lot of bearish signals now on the S&P 500. The more we look at that, the more indicators I put on, the more bearish it looks. Let's put one more, the MACD, Old Faithful. Yeah, see again, bearish. There's no divergence. We're not really seeing a divergence. So, but we are seeing a bearish trend. It's trending down. That's bearish. It's below 0. That's bearish. So we are getting a lot of bearish signals now on US 500. So maybe this is a possible short trade if you're looking to go short. Okay. I think we can maybe look at 1 or 2 stocks. Okay, let's look at Apple. So for those of you who follow Apple, they released their new iPhone 14 and the market was very happy, as you can see. That was, I think, somewhere around here. But I think they released it, but this was the day, well, right before they released it, right before markets open this day, they released their pre-order number. How many people have pre-ordered the iPhone 14? Market was very happy with it. Apple did very well on those numbers. But then inflation numbers came out. Like I told you, inflation numbers were not good. They're especially bad for growth companies. And growth companies, when we say growth companies, we're usually talking about the tech stocks. Apple is a growth company. Now, what's the difference between growth and value? Well, with growth companies, their future income, they're like a lot of this share price you see here is based on future income. They're saying, oh, we're not making that much money now, but we're a tech company. We will make a lot of money in the future. And it's that valuation that gives you the share price. But of course, when inflation is high, that future money suddenly is worth a lot less. Because, I mean, that's what inflation does. It devalues your money with time. So future income is worth a lot less when inflation is high. Naturally, inflation was very high yesterday, higher than expected. Apple's share price crashed. But we can't just put this on growth companies because, like I mentioned, this was just across the board. Risk off, all equities came down. I think less than 10 stocks on the S&P 500, an index of 500 companies. Less than 10 stocks were green yesterday. The other 419 were all down. They were all red. Okay, but that's Apple nevertheless. So what do we look? You might want to keep an eye on Apple today to see where it recovers, because this level right here, 155, the 3 pixels. There's a good level of support, resistance, boom, support, caught up. So if it recovers above 155 today, you might want to have a look at Apple. Say, hey, I'm going to buy Apple shares today because it's right at support. I mean, let's see what other indicators tell us. Okay, well, this is bearish. No divergence. But there wasn't a good example of a bullish divergence. As you can see, Apple, let me just see if we can get an arrow, was creating new lows, but in the same time, we did not see the same thing happening on the MACD. On the MACD, we were creating higher lows. So what happened? Apple recovered. So this is what I mean with these divergences, especially on the MACD, can be a very good predictive tool. Be very good at predicting a change in trend. As always, not always correct, not 100% of the time, but it can be very, very good at predicting a change in trend. And that's exactly what happened on Apple. We saw this divergence, the bullish divergence, and then Apple proceeded to recover. So if you followed this divergence and bought at 130, went all the way back up to 175. That's a $45 move. That's a big move. You could have made quite a bit of money on that trade. So that is why I like these divergences. But okay, at the moment, is there a divergence on Apple? And no, there's not. Just like on the S&P 500, it's big downtrend. It's trending down. It's below zero, very bearish. Let's put on another indicator. Let's try the RSI again. Same thing. Ooh, you see, it just went bullish with this big jump 2 days ago on Monday. But then inflation numbers came out, crashed, and now it's back into bearish territory. So that is bearish. Let's look one more. Okay, well, that's at least a bit bullish, but not entirely. Again, it's kind of like the same situation we had on the S&P 500 chart. Yes, we've got a nice big cloud predicting bullishness, but your short-term moving average way below your medium-term moving average. Your lagging indicator, same situation. It's way below where price was 26 days ago, so that's bearish as well. So even though it started out good, maybe it looks like a buy, maybe it looks bullish. The more indicators I put on, the more bearish it starts to look. So yeah, I guess this is again a wait and see situation on Apple as well. We'll have to see what happens. But okay, I think that's all we're going to have a look at today. Thank you for attending this webinar. As always, we will have one available again next month. Please attend. Please have a look at that structure. If you like that structured product that I spoke about earlier, Verve will be doing a webinar tomorrow. By all means, please attend it. If you have any questions about them, Verve will be your guy. He'll be very good at answering your questions. I'll highly recommend that you attend that webinar. I think next week we've got a small cap webinar. If you're interested in small caps, it will be presented, I believe, by Anthony Clark, who's one of the top rated small cap analysts in South Africa. So if you have questions about small caps, he is 100% the guy you want to talk to. If you want to invest in small caps, you've got some small cap stocks, you want to attend that webinar and talk to Anthony. He's very, very good. He knows what he does. But yeah, thank you for attending today's webinar. It was all my pleasure, and I'll see you guys again next month.